Something extraordinary is happening in the world of ultra-wealthy investors. While mainstream media tells you everything is fine, billionaires are making moves that tell a very different story. The evidence? It's hiding in plain sight. SEC filings, quarterly reports, public records that most people never bother to read, and what they reveal should make every investor pay attention. In the next 7 minutes, I'm going to show you exactly which 5 markets billionaires are quietly abandoning right now, and why this could be the most important financial warning you'll hear this year. Because here's the reality. By the time this hits mainstream news, it'll already be too late. Let's uncover the truth. Section 1. The evidence. I know what you're thinking. Another conspiracy theory about billionaires. But this isn't speculation. This is data. Public records, SEC filings, and the numbers don't lie. Warren Buffett's Berkshire Hathaway is now sitting on $381.7 billion in cash. Read that again. Nearly $400 billion. That's more cash than Apple, Microsoft, and Google combined. Buffett has been a net seller for 12 consecutive quarters. That means for 3 straight years, he's been selling more stocks than he's buying. And for 5 quarters in a row, he hasn't bought back a single share of his own company. This is the same man who famously said, "Be greedy when others are fearful." Yet he's sitting on the sidelines with a mountain of cash. When the greatest investor of all time refuses to deploy capital for 3 years straight, that's not caution. That's a warning. Jeff Bezos sold $5.7 billion worth of Amazon stock under a pre-arranged trading plan. That's not a small position adjustment. That's liquidating a massive stake in the company he built. And it's not just them. Across the board, billionaire investors are reducing equity exposure, building cash positions, and repositioning their portfolios in ways we haven't seen since the financial crisis. But it's not just that they're selling. It's where they're pulling their money from that should keep you up at night. Section 2. The 5 markets. Let me show you the 5 markets billionaires are quietly abandoning right now. Market number 1. Overvalued tech stocks. The tech sector has been on an incredible run, but billionaires are cashing out at the top. Jeff Bezos sold nearly $6 billion in Amazon. Tesla board members and executives have sold over $100 million in shares. Tech insiders across the industry are liquidating positions at rates we haven't seen in years. Why? Because valuations have become disconnected from reality. When stocks trade at price-to-earnings ratios of 70, 80, even 90 times earnings, smart money knows that's unsustainable. These valuations assume perfect execution, no competition, and infinite growth. Billionaires know that's fantasy. The concentration risk is staggering. Just 7 tech companies represent nearly 1/3 of the entire S&P 500's value. That's the highest concentration since the late 1990s, and we all remember how that ended. Billionaires are locking in gains and moving to the sidelines before sentiment shifts. Market number 2. Commercial real estate. The silent crisis. If you thought commercial real estate had bottomed out, you're wrong. It's getting worse. Office vacancy rates are hovering around 20% nationally. In major cities like San Francisco, it's even higher. And here's the terrifying part. $957 billion in commercial real estate loans are maturing this year and next. Banks can't refinance these properties at current values. Owners can't find tenants. And the math simply doesn't work anymore. Remote work isn't going away. Companies are downsizing office space. And these massive buildings are becoming financial tombstones. The commercial mortgage-backed securities market is showing delinquency rates of 7.29%. That's nearly 6 times higher than traditional bank loans. This is a slow-motion collapse, and billionaires saw it coming years ago. They've already exited. Now they're waiting on the sidelines with cash, ready to buy these assets at 40 cents on the dollar when the defaults accelerate. Market number 3. Chinese assets. The Great Exodus. The exodus from China has become a stampede. Foreign direct investment into China has turned negative for the first time in 25 years. That means more money is leaving China than entering it. Think about that. The world's second largest economy is experiencing capital flight. The Chinese property sector, which represents 30% of their GDP, is in full collapse. Multiple major developers have defaulted on hundreds of billions in debt. Consumer confidence is at historic lows. Youth unemployment is estimated between 25 and 30%, though the government stopped publishing official data years ago. And here's what makes billionaires nervous: geopolitical risk. The increasing tensions over Taiwan, trade disputes, and regulatory unpredictability have made Chinese exposure unacceptable for most Western investors. Billionaires aren't waiting to see if things improve. They've written off China and moved on. Market number 4. European assets and euro exposure. Europe is facing an economic crisis that's being severely underreported in American media. Germany, Europe's economic engine, has been struggling with near-zero growth. Energy costs remain dramatically higher than pre-crisis levels, making European manufacturing uncompetitive globally. The manufacturing sector has been contracting month after month. European banks are sitting on massive exposure to struggling commercial real estate and zombie companies that were kept alive by years of negative interest rates. Now that rates have normalized, these weaknesses are being exposed. Billionaire investors have been pulling capital from European equities at record rates. Why? Because they see structural problems that can't be solved quickly: an aging population, high energy costs, lack of competitiveness, and a banking system vulnerable to shocks. The smart money is betting on further European decline, not recovery. Market number 5. Long-duration bonds and government debt. This is the sophisticated play that most retail investors completely miss, but it might be the most important one. Billionaires are dumping long-term bonds because they see an impossible situation developing. The national debt has crossed $36 trillion. Interest payments on that debt now exceed $1 trillion annually. That's more than defense spending. The math has become unsustainable. Either the Federal Reserve cuts rates aggressively and triggers inflation, or they keep rates high and trigger a debt crisis. Either scenario is terrible for long-term bondholders. Prominent billionaire investors have publicly called long-term treasury bonds one of the worst investments you can make right now. They're moving to short-duration assets, gold, and inflation-protected securities. They're not positioning for stability. They're positioning for volatility. Section 3. What this means for you. So what should you do with this information? First, understand that billionaires operate on different timelines than we do. They can afford to be early. They'd rather sacrifice short-term gains than risk catastrophic long-term losses. Their goal isn't to time the market perfectly. It's to survive and thrive through any market condition. Second, this doesn't mean panic and sell everything tomorrow, but it does mean reassess your risk exposure honestly. If you're heavily concentrated in overvalued tech stocks, have exposure to commercial real estate, or significant positions in China or Europe, it's time to ask yourself, what's my downside if things go wrong? Third, cash is not trash in this environment. With money market funds yielding around 5%, holding cash actually pays you to wait. And when markets correct, not if, but when, cash gives you the power to buy quality assets at massive discounts. Fourth, diversification actually matters now. It's not just a buzzword. Consider gold, which has been hitting record highs. Consider commodities. Consider assets that aren't perfectly correlated to stock markets. And finally, stop listening to talking heads on financial television who have every incentive to keep you fully invested. Start watching what the billionaires are actually doing. The data doesn't lie. Their actions speak louder than any pundit's words. They've already repositioned. The question is, will you? Look, I'm not here to tell you to panic or make rash decisions, but I am here to show you that the wealthiest, most connected investors in the world are repositioning for something significant, and ignoring that reality is not a strategy. If this opened your eyes to what's really happening, hit that like button and subscribe to Finance 0.1. I track SEC filings, capital flows, and billionaire moves in real time, breaking down what it means for you. Drop a comment. Are you repositioning your portfolio, or do you think this is overblown? The billionaires have made their moves. Now you're informed. Stay ahead of the game.